Bitcoin's historic 4-year cycle may be breaking, at least according to Cathie Wood, the CEO of Ark Invest. She says the old halving driven cycles that once defined Bitcoin price action could be disrupted as institutions flood the market and Bitcoin shifts from a safe haven to a risk on asset. If you're a crypto investor, trader, or a YouTube creator tracking crypto trends, this could change everything you thought about Bitcoin's timing and volatility. All right, guys, welcome back to Ledger Prime, where we break down crypto news, market insights, and what it all means for your portfolio. Please take some time, hit the like button, hit subscribe, because today we are unpacking Cathie Wood's latest Bitcoin predictions, including why the 4-year halving cycle might no longer matter and what risk on Bitcoin means for 2026. All right, here's the scoop. Cathie Wood, one of crypto's most bullish institutional voices, told Fox Business that Bitcoin's volatility is coming down compared to the early days when Bitcoin would regularly fall 75 to 90%. But now, institutions have entered the market in a big way. Ark Invest believes that this influx of professional capital will prevent massive declines, potentially meaning that Bitcoin's low from a couple weeks ago, right, the 82,000 or whatever that was early December, its low could mark a floor. This is not financial advice, guys. It's just commentary. But historically, Bitcoin has followed a 4-year halving cycle where the mining reward for new blocks is cut in half. Halvings have often triggered bull runs because they reduce the supply of new Bitcoin. But Wood and analysts at Standard Chartered argue that ETFs and institution adoption now make the old halving logic obsolete. So why does this matter? Right? Why does it matter? Well, Cathie Wood says Bitcoin has flipped to a risk on asset. This means it is going to be moving more like stocks or real estate rather than a safe haven like gold. And a safe haven like gold, that's arguable. But anyway, in previous crises, the European debt crisis, regional banking turmoil in the US, Bitcoin acted risk off. But today, it appears gold is the go-to risk off asset, and Bitcoin is now part of the risk on play. What does that mean? It means when it used to be when people got scared and needed to sell and get their money out, gold and Bitcoin would go up. But what we're seeing happen now with all the ETFs and everything going on with crypto and Bitcoin in particular, when people need to sell, they're selling their stocks and their Bitcoin and putting it into gold as risk off. So for investors, this is huge because Bitcoin may now react more to market sentiment and institutional flows rather than historical cycles. And that changes strategies for traders, holders, and crypto-focused creators reporting on market trends. Okay? So, how does this impact the institutions? Well, Ark Invest isn't just talking. Cathie Wood, she's all about action, man. If you've followed her ARKK fund, she was buying Tesla hand over fist. Palantir, like when she gets invested in something, for lack of a better word, or convicted about a narrative, man, she puts her money where her mouth is. They've added shares in Coinbase, Circle, and their own Bitcoin ETF, ARK 21 shares Bitcoin ETF, ARKB. Okay, this is the kind of institutional support that stabilizes the market, reduces wild swings, and could make Bitcoin less of a lottery ticket and more of a legitimate investment asset. Standard Chartered predicts the halving cycle's traditional 18-month post-halving peaks are going to become irrelevant because ETF buying changes the supply-demand dynamic. The halving is no longer the automatic Bitcoin price driver it once was. It's just not. The market has changed. So what does this mean for crypto investors? Well, volatility may be lower than in previous cycles. Institutional flows could dictate Bitcoin price more than miners' rewards. And long-term bull plays may need to rethink timing strategies and entry points. Okay? So, simply put, if you were betting on history repeating itself, this might be the time you need to adjust. So Cathie Wood and Ark Invest are signaling a new era for Bitcoin, which is less about wild swings and more about institutional backing and a market that behaves differently than it did in 2017 or even 2021. For traders and crypto enthusiasts, the message is clear. Adapt yourself to the new risk-on reality. Guys, if you found this breakdown helpful, hit like, hit subscribe, and turn on notifications because we try to keep you ahead of the curve in crypto markets, the trends, the strategies, and we try to separate the signal from the noise. What's distracting and what is actually signal, actionable intel that we can use for education or to make money. Because guys, when crypto cycles change, staying informed is your edge.